There's plenty happening in economic figures today, with those GDP figures set to come out any time now. Joining us now live to discuss this is Nicki Hutley from Deloitte. Nicki, thank you for your time. What are your expectations for these GDP figures?
Well, they're getting more bearish by the second. We got some more partial data yesterday, and you'd know that the inventories figures, so stocks, fell quite significantly in the quarter, and that's going to take about 0.6 percentage points off GDP right across the board. Each sector is not just retail and wholesale, but mining and manufacturing have been running down stocks. We know businesses have been pessimistic. So on the output side of the accounts, the expenditure side of the accounts rather, those numbers look as though we could get a quarterly number that's flat, maybe even slightly down. That's if at the worst end of the market, which would take the annual rate down to around 1% growth. The worst level since the global financial crisis. In fact, possibly the worst level since we introduced the GFC, depending on where it comes out. But of course, we have had stronger figures on the income side of the account. And interestingly, those households have wages, salaries and supplements. Individual wages might not be going up so much, but the combination of employment and wages means over 5% increase in that side of the accounts, and very, very strong profits, a lot driven just by BHP, but still profits up a little bit. So that's a better bit of news. If we get that slightly better household income story, plus the tax cuts, plus the lower interest rates coming through, that could see the September quarter look a little bit better. We know these figures are backward looking, so a little bit of caution. Everyone's going to react, of course, when those numbers come out and go, oh gosh, everything's terrible. But we need to sort of sit down and absorb those figures and think about where we are now versus we know the second quarter wasn't great. But what do we think about where we're heading now and what's going to be the outlook for this current quarter?
And Nicki, how does that feed into the RBA thinking on rates? And further to that, the context of what seems a revival in some parts of the housing market?
Yeah, well, that's the other side, of course, with house prices now rising in Sydney and Melbourne. That also will give at least some households more confidence. So the RBA is in a bit of a spot. If they don't believe that those factors that I've talked about, including those better house prices, some shift in household incomes, those tax cuts, if they don't think those are going to have enough impact, you could argue that they could go ahead and cut interest rates later today. But I think that they'll wait and see what the impact of all those things is throughout this quarter. Not great signs in August, but we've still, got a little bit more of the quarter to go. And so I think they'll wait and that we'll, let's see what's been happening in the next couple of months, probably November. But you certainly couldn't rule it out as a zero chance that they would go tomorrow. They are looking for confidence boosts, though. And we know last time they cut rates, the market actually took that as a negative and confidence actually plummeted. So pressure from business sector now to do something on the government's part to improve confidence.
And I guess a lot of that fear in the market is the fact that there isn't much more room to move. If there is another interest rate cut, we're edging awfully close to zero.
Yeah, I mean, you could argue that it's absolutely pointless to do any more interest rate cuts, but we know that the Reserve Bank says they are willing to move, that the lower bound is 0.5, so there's still another 50 basis points in it. How much of that gets passed on through the banks, though, to borrowers is a really good question. We didn't see the full amount last time. They've already got, their lending rates, their deposit rates down very, very low. So they're not going to be able to pass on a lot of that to households. And this is why we've seen the Governor of the Reserve Bank urging the federal government to do more on its part to stimulate the economy. The government's saying, no, we're not going to do anything. But better messaging might be, particularly after tomorrow, we don't think it's necessary right this second, but we stand ready to do something. And I think they are, behind the scenes, the reporting is there are some conversations around what they could do with stimulus. So, let's hope that if push comes to shove, that they will step in. And I think that timing is getting, sooner and sooner now.